pleased to introduce this new panel on digital money and payment infrastructure for all. We have 4 distinguished speakers and our moderator, Emma Joyce, as the Chief Revenue Officer at GBBC here. She's joined by Debra Brookes of the Wyoming Stable Token Commission, Pui E. Lai of the Monetary Authority of Singapore. We have Dominic Paolino of Accenture and Wee Ki To of JP Morgan Kinexys. Please join me in welcoming them to the floor. Thank you.
Wonderful. Thank you so much. It's an absolute delight to be back in New York, one of my favorite cities ever. Thank you so much for joining us today. We're going to get right into it because we don't have long. And as you know, we're here to talk about digital money and payment infrastructure for all. I know we have been introduced, so are we okay to jump straight into the questions? Does that work? Okay, fantastic. Good. Wonderful. So my first question for today, and I'm going to go to Wiki if that's okay to start. I'd like to hear some examples of what you're seeing in this space, what you're working on. Tell us what you're doing and perhaps let us know about some use cases if possible, please.
Yeah, thanks, Emma. So very happy to start this off and kick it off. So over at Kinexys by JP Morgan, we do have a live blockchain-based payment systems today. So it's a live system. We transact about $2 to $3 billion every day. So I guess fairly, probably within enterprise usage, probably one of the bigger ones. So a lot of our clients actually are very happy using us for multiple different reasons. And generally, you know, when we talk about, say, stable coins, deposit tokens, CBDCs, there's just a lot of discussion about it, but sometimes we don't kind of break it up into the tokens and the underlying platform itself. So actually, when we think about from a benefits perspective, a lot of the benefits is really from the underlying technology rather than the different forms of money. So in our case, for example, the use of blockchain for payments, we allow our clients to do near real-time, around-the-clock transactions in multiple different currencies and across multiple or the major funding locations. So what our clients are doing, so this is mostly in the wholesale space. So treasurers, the way that they are using Kinexys digital payments is essentially moving funds across all the different locations, and having instant availability to funds is actually changing the way that they are thinking about payments. So in a more traditional treasury management perspective, we always hear around concepts around like follow the sun. So essentially at the end of each day, you move your funds to the next location so they have availability to the funds. But when you are actually having 24/7 availability of funds, then the question is, do some of these ideas around like following the sun or ideas around like forecasting or making sure that you have sufficient liquidity buffers, are they still, do you still need them? A lot of times it's actually no. You can actually change the way that you think about treasury management, because if I have instant availability to funds anywhere around in the world, then I don't need to prepare liquidity buffers, because anytime I need funds to make payments, I just draw it from the location that has enough of those funds. I move it to the location that actually needs to make payments out. So the concept of like liquidity buffers and forecasting, actually a lot of this concept changes once you have that real-time availability to funds. So I think that's probably one of the biggest use case. Another of the really interesting use case is from a programmability perspective. And this is, I guess the first layer of it is really around automation. So again, a lot of our treasurers, they are using it from an automation perspective. So some of it is really very basic standing instructions. The idea that, oh, at this point in time, I'm going to move funds from this one account to another account. But with programmability, they are able to start including more and more kind of like conditions, actions into that some of these standing instructions. So we are starting to get it, see it getting more and more complex. And the really interesting part around automation is moving beyond just intra-organization automation to inter-organization automation. And we're able to do that because we trust the logic that has been deployed and the faithful execution of the logic. So this is really the idea of smart contracts. So if you have two parties that agree that, okay, this business smart contract is going to govern the way that we interact with each other, they will feed it data. And when the smart contract says, okay, this is the point in time where a payment has to be made, then that business smart contract can trigger the payment smart contract, and then the payment is made automatically. So now essentially you are able to move into an inter-organizational kind of automation where you have the buyers, the sellers, and the bank all operating very seamlessly with regards to each other, because there's trust in the underlying smart contract, the trust in the underlying logic that is resulting in payments being made.
I mean, it's very exciting, isn't it? And, you know, if you think how far things have come in a few years, thank you for sharing that with us. That is really fascinating. I want to explore a little bit about private and public sector partnerships and if that's important. Pui, would you please let us know how the Monetary Authority of Singapore is working with the private sector and if you think those partnerships are important?
Hi, everyone. Thanks again for having me here. And so maybe I'll take a step back and just share a little bit about the Monetary Authority of Singapore, or we call it MAS in short, the unique role that we play. I know a lot of people know it as a central bank or a financial regulator, and that's true. But we actually also have a mandate to develop the financial sector. And our dual mandate, you know, to develop the financial sector as well as to regulate it sometimes appears contradictory. But we see it in a different way in that it forces us to really look at, you know, the risks and the rewards of everything that we do, right? And so if you talk about innovation in money and payments that we see today, it's really reshaping the way households, businesses, and governments have been transacting. And being a central bank, we know that we cannot just remain at the sidelines, right? Our responsibility is really to ensure that this transformation strengthens rather than weaken the foundation of trust in money. And for us in Singapore, I think the balance between innovation and safeguarding investor interests is really espoused through purposeful public-private partnerships. And this is not something that we do only in this digital space, but in other areas of work that we're focused on. So if I just drill into why, so it is important, and why we think it's important is because we acknowledge that both the public sector and the private sector bring a different perspective to the table. They bring different important views. The public sector, we can act as a convener. We can also allow room for exploration, for experimentation, while the private sector brings resources and expertise which we do not necessarily have, right? So just to give an illustration of how we've done this so far, I'll just give two examples, one at the token layer and another at the infrastructure level. So at the token level, I think we've embarked on a series of asset tokenization projects under what we call Project Guardian. And really, you think of it as a cross-border regulatory sandbox. We've involved over 40 global financial institutions, industry associations, regulators, industry associations as well, really to explore use cases for asset tokenizations. We've done this with partners from over 7 jurisdictions. And we have more than 15 industry trials that we've run so far across 6 currencies and multiple financial products, right? So we've seen that, you know, these pilots, these experiments, they've worked, and the members have actually published even several frameworks across whether is it fixed income or funds, really to help guide the rest of the industry in terms of implementation of tokenized assets and how to reduce the complexity as well as cost of adoption. I think Vicky has shared a lot, some examples, you know, of how some global firms have also commercialized. They've gone beyond experimentation, and we're seeing besides JP Morgan, you know, things like tokenized money market funds that are also growing in scale, whether it's in Singapore or in the US. And I think those are all encouraging things to see. The other example that I was going to give is something that we're doing at the infrastructure layer level. And that's really part of our next phase efforts to scale the asset tokenization. We're collaborating with global financial institutions as well as policymakers on this initiative where we envision that, you know, we'll have an open, interoperable shared ledger infrastructure that can host multiple layers of multiple types of tokenized assets and facilitate seamless cross-border transactions.
Fantastic, thank you. And as we see a lot more of this collaboration taking place, do you expect it to, I mean, I expect us to see more and more of it, do you?
Yeah, I think what is unique about the financial markets is that it's a very global one, right?
Yeah.
And we need that collaboration across, we can't see innovation happen if it's all based on individual efforts. We're going to need to see collaboration across stakeholders. at all levels.
On that point, I mean, I think a great example of that is Paxos issuing the global dollar network out of Singapore, right? Like that is kind of something that is totally breaking the paradigm of US dollars need to be ring fenced into the US, and now they're being issued under a Singaporean regime and they're getting global access and adoption. It's not a pilot, it's a production use case. And I think that's emblematic of the innovation that you guys drive as MAS.
Yeah, absolutely. Thank you for that. Debra, as the industry evolves with the passage of the Genius Act, how can companies who want to come into the US and set up a company, how can they start to engage, or that are already here, how can they engage more with regulators?
Thank you. Good morning, everyone. Before I answer that question, I have to give the typical disclaimer as a government employee. The opinions that I give here are my own and do not reflect at all with the state of Wyoming, the commission, or the commission staff. So again, thank you for having me here. And thinking about this particular question, you always have to look at, particularly with the passage of Genius. Genius, as we know, focuses on stablecoins. So we're looking at it from a stablecoin issuer who wants to gain entry into the United States. You also have to then look at the amount of stable coins that are in circulation. Of course, Genius looks at the above or below a certain mark. And if you're above that mark, you engage with the federal government. If you fall below it, you'd have to deal with the 50 states and the territories. So kind of looking at it from there in the paradigm, the OCC, I understand is a tough agency. I don't have much visibility on the OCC, although I do have some former colleagues of mine that work there. You absolutely, and I think that's also the case with the states. If you have the funds, you absolutely want to bring in folks who have that relationship with those government agencies and the regulators. My previous position, it's interesting that the previous speaker was my boss at one point, Adrian Harris, the superintendent, as I dealt with oftentimes with applicants and supervisees, including Paxos, that approached me with various questions, concerns, complaints, you name it, they did it. And really structure it with bringing in individuals who understand the system, can navigate. There are certain individuals that I know understand how we work, how we think, how we operate, and thus they can really tailor and really talk to their clients about, okay, this is not what this agency is looking at, this is what they're focusing on. These are the types of questions that you're looking at. For example, just looking at DFS, for an applicant, we want to make sure that you are completely collateralized, make sure that you have a robust compliance program, make sure that you have your C-suite in place, and try to pare down any issues, because once an issue arises, that's when you're going to see delays. And oftentimes you have applicants that really submit, if I can say, not necessarily robust applications and such, you know, you want to throw it in the trash, but you ultimately have to now tell them to try again. So I think bringing someone in to help you organize and present absolutely helps, particularly with the states. And I think that's where it gets challenging. Each state is different. You have certain states that merely require a money transmitter license, and then you have other states like New York, California, and recently Illinois that require a heightened requirements. And how do you kind of deal with that at a lower level? I would say pray in the first instance, but in all honesty and fairness, you absolutely want to have someone in your corner that understands the 50-state approach. There was a licensee of DFS, I won't mention their name, that adopted that approach, and it took a while for them to get a license in all 50 states. But that was their goal and that was their objective, and that was fine and we were fine with that ultimately. But saying that to say, if you want to engage with the regulators, always be honest and truthful. Do not come and BS us, because we will see it coming. You'd be amazed how often when you come to us and you talk to people and the BS monitor starts to percolate, and we'll talk afterwards and say, do you believe that? I'm in, polite companies. I won't use the terminology we used to say in the back end. But yes, you want to be forthright, candid, and honest with your regulator. If you don't know, say you don't know. It's better that you say you don't know as opposed to giving us a BS, because we'll see it coming, and we'll ask the follow-up question that really lets us know. But again, if you have a third party, they'll tell you in advance, don't BS a regulator, because once your reputation is tarnished, it does hurt you. And once it's hurt, you kind of go in the back of the line at that point. So you always want to come with a very robust candidacy, have a robust program in place, even if it's just skeletal, like a robust compliance program, consumer protection. Many states, including New York and Illinois and California, are very pro-consumer protection. So they're going to look for your protocols to ensure that you have a robust consumer protection program. You have to make sure that you are collateralized or over-collateralized and have the monies stored in particular and safe, high-quality liquid assets, and really give us the comfort that you are compliant both regulatorily, both consumer protection, as well as, most importantly, finance.
Thank you. That's very good advice. Thank you. Dominic, can we think a little bit about challenges? And when we're looking at existing payment infrastructure, is identity, can that be a problem sometimes? And would digital identity help?
Yeah, I love this question because right now on the back of the Genius Act, everyone's really excited about digital currency and stablecoins and where this is all going to go towards remittances, et cetera. One of the things I'm thinking a lot about, if I take off my commercial hat and put on more of the SDGs and the UN and the spirit we're here today, is there's over 1 billion people in the world without access to a proper identity that would meet KYC, AML, banking standards, and it makes it really hard to interact with the financial system. And so we think about, I think it's infrastructure for all. I think identity is a key pillar of an effective payments infrastructure because there's kind of two ends to the coin, I guess pun intended. On the one side, you need folks to have an effective identity so that way they can participate. But on the other side, you need the effective identity so that way we prevent social ills that come with preventing money laundering, terrorism financing, all those challenges. And so we at Accenture have been driving this space for a while. Actually, all the way back to 2017, we had an initiative with the UN and Microsoft called ID 2020, which was a verifiable credential approach that was attempting to understand how we could drive and provide identity for these folks, the 1 billion folks on around the world who aren't able to interact with the banking system. And so, in the US, there are some challenges around state preemption of a national identity schema, which make it difficult to have a national identity. But if you look at things like Singapore with SingPass or Aadhaar in India, there are clear kind of patterns emerging of how you can develop these new digital identity solutions right now that are primarily being used from a consumer experience layer to speed up onboarding. But how do you develop into the kind of second phase around verifiable credentials, like the W3C standards, to drive a model that is more inclusive for all and enables actually better effective payments? We did a pilot as part of the Digital Dollar Project with Western Union looking at global remittances. And it was really easy to get a stable coin from Western Union to the recipient banks in the Philippines. But getting it from the bank into the end hands of the end consumer still has the last mile challenge. So in summary, I think that, as we think through this week and going forward, there's a ton of innovation happening on the payment rails and the payment instruments. But how do we ensure that the folks who are most vulnerable are able to access these instruments and participate in this new economy that we're developing?
And do you think we'll see a lot of movement and traction on digital identity over the next few years?
I think so. I think you're seeing both at the government level. You obviously have the IDAS that's happening in Europe right now. You have, as I mentioned, some of the stuff that's happening in Asia. In the US, there's, I think, 14 states that have mobile driver's license. Only 2 of them have verifiable credentials that would align with the W3C standards. But in the financial services space, where I spend a lot of my time, I am starting to see early signals of NDAs and consortiums forming. Folks basically saying, look, we're entering into this token world, new digital wallet infrastructure. Why am I not having a digital identity that I can store in that? So I do expect to see a lot of movement in the coming, 6 to 18 months.
Okay. Brilliant. Thank you so much. Question for the panel. So do jump in, whoever wants to take this. But what role do you think that CBDCs, stablecoins, tokenized deposits play in progressing inclusive payment systems? Who'd like to take that? Miki?
I feel that the different forms of like digital money all play different roles, and eventually they'll find their role within the the broader set of ecosystem. So now from a more wholesale perspective, for example, when we look at commercial banks now. Assuming we all have different deposit tokens, we need some ability to interchange between them. Then how would we want to interchange between them? In traditional payments, we do it through central bank money. We are all connected to each other on the RTGS systems. So could be Max Plus in Singapore, could be FedWire in the US, but there's always that ability for commercial bank to connect to each other and settle between each other. So the question then is, if you are transacting on blockchain rails in the future, does it make sense to have central bank money on blockchain rails? So I would say there is a clear role for central bank money, there's a clear role for commercial bank money. And of course, when it comes to stable coins, I feel like it's really all in the name, because when we think about Mika, for example, they actually refer to stable coins as e-money tokens. So e-money tokens is, in a way, I would see it as like a token form of e-money. And e-money has shown to work really well in some jurisdictions for low value retail payments. It becomes like a much less friction kind of I guess a setup where you are able to make retail payments with each other with much lower costs and fees. So is that a role for stablecoins from a retail payments perspective? I say maybe yes, but of course there are a lot of other questions to be worked out, and I'm sure some of us over here who are working on stable tokens might be able to add more on those perspectives as well. Thank you.
I'm gonna add that these are all like buzzwords for today. With innovation, I don't know what maybe in 3 years or even 2 years from now, what would be the hot form of digital money that we'll be talking about. But I guess at the very bottom of it, I think what we see is that if they're well designed, if they're well regulated, this really could support enhanced features that the financial markets need today. Whether they are not widely available today, right? Is it whether atomic settlement or ability for senders to specify conditions for value transfers? I think the use cases will also differ depending on the kind of markets. I think some of the panelists alluded earlier as well that maybe in more emerging markets, this could leapfrog much further for that specific market, whereas in developed markets, maybe it's really just about lowering costs and increasing efficiency.
Thank you. We've only got a couple of minutes left. So before we finish up, does anyone have any thoughts or views on really what's really important for the future of digital money?
I mean, I think one theme we've heard here is that currency and capital markets are a team sport, and it's now becoming more and more of a global sport. And so, continued collaboration between regulators and the private sector is, I think, a critical step. I also think the public needs to continue to have a voice in these things. My personal hypothesis is that kind of 5-10 years down the road, most people won't understand whether behind the scenes you're paying in a CBDC, a stable coin, a wholesale instrument. It won't matter. It will just happen like magic. But between now and then, we need to make sure that we are building the right rails for the right purposes with the right guardrails around them. So I think continued engagement, dialogues like this are super important.
And I will add, I mean, Dominic made a very poignant point about how most people really don't care how information and money is sent, so long as it gets there safely and securely. So on the back end, for us, we want to make sure that the rails are in trying to be diplomatic, but the rails are does its job and engenders trust. And with the stable token, the frontier token, because I would be remiss if I don't mention the stable token that we just issued in the state of Wyoming last month, the goal for the frontier token really is to engender and get access to have our tokens reach people who are the unbanked, those who don't have the ability to go to a bank or maybe don't trust going to a bank, but they have a cell phone. So it's absolutely something that we are seeing, to have remittance go from a blockchain to someone's cell phone. And I think that's probably the next evolutionary case.
Absolutely. And thank you so much
Thank you.
to everyone on the panel and everyone in the room who is working so hard to get everything in the back really well done so that we can see that magic and we won't know what's happening. And I think, that's a very exciting prospect. Thank you once again. Quick note from me. 15th of October, if anyone is in Europe, we've got an amazing event at the European Parliament. You're all invited. Ask me for more details. It's a GBBC event within the European Parliament. We'd love to see you there. Huge thank you to my panelists. Really honoured to be on a panel with you all today. And thank you for joining us.